Thank you very much for inviting me to the wonderful meeting. And I first wanted to discuss Dr. Sawada's paper. That's a very wonderful paper. And the general comment, actually, it's a very wonderful overview on the household and corporate debt in Japan. It's a highly balanced overview. Also, some international comparison clarify the various important features of the Japanese household and corporate debt. And a lot of useful implication for the other Asian country, and I mostly agree with his conclusion. But since his discussion is the sort of aggregated data of the household debt and corporate debts, so I'd like to discuss the more heterogeneous aspect of the household debt and corporate debt. And there are several types of household debt. One is the housing loan, and the other is the consumer loan. Those two are the major loans. And recently, it's becoming more important for loan for the retired elderly because of the population aging in Japan. And in my impression, degree of borrowing constraint differs substantially depending on the type of household debt and the type of borrowers. Let me discuss the housing loan in Japan. And as Professor Sawada discussed, it's a majority in household debt in Japan. And one key feature in the Japanese housing loan is its lending rate is extremely low. For example, last month, even the 10-year fixed rate housing loan was 1.2%, even borrowing from the large banks. And if we borrow from the internet banking, it's less than 1%, even for the 10-year fixed rate. That's the extremely low borrowing rate. But one reason is, of course, the Bank of Japan's minus interest rate policy. But even taking account those policies, it's extremely low. So the banking sector's profit from the housing loan is very, very small these days. One reason is the housing loan in Japan is highly collateralized. So that even if they have some default, they can cover the collateralized. And also, in many cases, it's guaranteed by the others. When I purchased my house, I was asked by my banks to purchase the insurance premium and covered by the default risk. That usually happens. So that's one of the reasons. So the most regular worker, particularly workers in large companies, it's easy to borrow the housing loans, even though their current income is very low. Banks trust that person because he works for that company and under the lifetime employment system and also the seniority wage system. So even though their income, current income is very low, they are easy to access the housing loan. On the other hand, in case of non-regular workers, such as dispatched workers, they are sometimes faces a serious borrowing constraint. And there is several anecdotal evidence, and when I watched the movies, one famous musician said his current income, he was very famous, and his income was very high, but he had a very serious difficulty in borrowing the housing loan from the banks. Why? Because he is not a regular worker, and so his current income was very high, but bank didn't trust that he would keep successful in the future. So that's the reason he had a big trouble. So in the Japanese housing market, not the current income, but permanent income will be the more important factor to affect the degree of borrowing constraint in Japan. That's the one of the comment on the housing loan market in Japan. Secondly, I'd like to comment on the consumer loan in Japan. And consumer loan market was much more complicated. And we previously called the consumer loan market as a sarakin in Japanese. And after the crash of bubble in the early 1990s, large consumer companies increased their shares in the Japanese consumption loan market. So that after the crash of bubble, some consumers had troubles and then they could access the consumer loan from the large consumer companies. So that expansion probably reduced the consumers' borrowing constraint. But their interest rates were very high. That was very much different from the housing loan market. And also the situation was, so that because of those high interest rates, even the riskier borrower could access the consumer loan market, but we had a very frequent borrowers default at the same time. And there was some institutional program of the Japanese consumer loan market. That's the gray zone program. And there are two types of law, and one was the interest rate restriction law. That ceiling was lower, but there was another ceiling law. That's the act regulating the receipt of the contribution. And until the 2010, the distinction of these two laws was not clear. And for example, when we borrowed more than 1 million yen, the former ceiling was 15%, but the latter ceiling was 29%. And many consumer loan companies set their lending rate exceeding the former ceiling and used the latter ceiling. So the lending rate was very high, but because of the high lending rate, even the riskier consumer could borrow the money. But the default risk was very high. But there was some serious big structural change. That's the Supreme Court decision. And in January 2006, Supreme Court decided that ceiling of the lower ceiling is only valid, and we cannot apply the higher ceiling. That's the Supreme Court decision. And then consumer loans lending rate declined substantially after that, and after 2010, the ceiling was strictly regulated by the lower ceiling. Then, of course, the default rates declined substantially, but at the same time, risky consumer came to face the borrowing constraint. And actually, the Professor Sawada's figure 4 clearly shows the consumer loans in Japan declined substantially before and after the 2010. But that was, of course, affected by this institutional structural change, not the global financial crisis. So that's, but anyway, the two markets between the consumer loan market and housing loan market are very much different, and applied lending rate are very much different. And also, recently it's becoming important for the loans for retired elderly. It's not developed at all, but because of population aging, it's becoming important. And the point is that some elderlies has a substantial illiquid assets, such as the real estate. But some cases, they may have a limited amount of liquid asset. For example, some old person who lived in the center of Tokyo, his house value is very, very expensive. But in some cases, his bank deposits are highly limited. In that case, he needed to liquidate that illiquid house. But that type of system is highly limited in Japan. And actually, in theory, the reverse mortgage exists, and that is the type of mortgage in which house owner can borrow money against the value of his or her home. But such mortgage is highly limited in Japan, so that's the sort of a borrowing constraint in Japan that is becoming more important these days. Let me briefly move on to the corporate debt. That is also a very important topic in Japan, and until the early 1990s, the bank loan dominated corporate debt in Japan. So that Japan was the bank-based society. But because of the financial liberalization, promising company increased the equity finance and reduced the bank borrowings. So the banking sector lost a good customer. So they explored a new customer, and that was the real estate sector. But after the crash of bubble, they faced a serious problem. That's what happened in 1990s. And this is the change of the equity finance and corporate bond finance in the late 1980s. So that's happened for the good customers. Good customers switched from the bank borrowing to the equity financing, corporate bond financing. At the same time, the banking sector increased their lending to the real estate sector very substantially in the late 1990s. That's what happened during the bubble period in Japan. But in 1990s, that's called the first lost decade. Serious problem happened because the banking sector faced a very, very serious problem of the increased non-performing loan. And as Professor as Dr. Sawada pointed out, there was a substantial credit crunch. But the story is not everything, because we faced more Japanese financial market situation in those days was more complicated. Some promising company faced a borrowing constraint, but at the same time, some insolvent company could borrow, could keep borrowing from the banking sector. That was called evergreen lending. And some Tankan survey clearly shows that there exists serious borrowing constraint in 1997, 1998, 1999. But at the same time, we see various evidence that there existed various zombie farms in Japan. Those zombie farms, even though we know that they are insolvent at that time, particularly in the real estate sector, construction sector, and retail sector, but could borrow the money from the banking sector because of too big to fail. That's what happened. So when discussing the 1990s situation in Japan, just discussing the credit crunch, that is important, of course, but it's not everything. We also need to discuss the evergreen lending at the same time. And 2000 situation is much more complicated. As Kawanto already discussed, that things changed substantially. Non-performing loan declined substantially, and zombie farm almost disappeared, and banking sector became sound and healthy. So we thought that everything would be solved and the Japanese economy will recover, but it didn't happen. And actually, the corporate restructuring made the many Japanese non-financial corporations very, very conservative and reluctant to borrow their borrowing. So in that sense, there is no credit crunch and there is excess supply of loans, but borrowing sectors become very, very conservative in 2000. And this is what happened to the non-performing loan in Japan. And the bubble crashed in the early 1990s, but non-performing loan kept increasing until the early 2000. But after the 2002, non-performing loan in Japan declined very substantially, and it didn't increase even under the global financial crisis. And at the same time, the non-financial corporate sector who are in deficit sector until the mid-1990s turned into the surplus sector. So in that sense, most firms had no need to borrow from the bank because of they have their own internal fund these days. And also, of course, and those cash-rich companies are increasing not only among the large firms, but also small and medium firm enterprises these days. But of course, some small and medium-sized enterprises are not cash-rich countries, so need to borrow. And but at the same time, after the global financial crisis, Japanese government started a new law, that is the SME Financing Facility Act. And because of this strong government support, even the non-cash-rich small and medium-sized company tended to face a little borrowing constraint, and that political support also reduces the borrowing constraint. But there is a lot of discussion that this government support reduced damage the natural selection process in the financial market, and even the very bad SME could survive under this government support. That's my comment on the Professor Sawada's paper. But anyway, very interesting paper, and I like that paper. And let me briefly discuss the Thai's paper. Actually, I'm not a specialist in Thailand, so I'm sorry, my comment is very poor. I'm sorry. But anyway, this is a very excellent and informative overview on the household debt in Thailand. And I learned a lot on what happened in Thailand. But let me extend the data more from the early 2000s, and that's the more spectacular. They suggested the household personal loan in Thailand increased, but when you look at the early 2000s, it wasn't so. Its share was not so large. Of course, lending to the manufacturing sector is more important than the lending to the household sector in the early 2000s. But we see the very, very dramatic increase in the housing loan in Thailand. And on the other hand, the lending to the manufacturing sector increased only modestly. So that's the very important, and that's what the Thai's paper looked at, and they focused mostly on the housing loan, and that's quite reasonable, and I like that approach very much. And also, we see that the change of the non-performing loan in Thailand. And actually, in early 2000, non-performing loan in Thailand was relatively large because of the Asian crisis. They still have a recovering process of the Asian crisis, so that they had a substantial, they still had a substantial amount of non-performing loan in the early 2000s. But it declined substantially throughout the 2000. But recently, it's increasing, as you see. And one of the major sources of the increased non-performing loan is the personal consumption loans. So even in that aspect, focusing on the personal consumption loan is one of the important aspects when looking at the Thai's financial market situations. But this chart also shows that it's not everything. There is a substantial increase in the consumption loans in Thailand, and also they increased the non-performing loans in Thailand. But at the same time, other sectors, particularly the wholesale and retail trade sectors, non-performing loan is also increasing. And housing loan increased a lot, and it increased relatively non-performing loan in Thailand. But other sectors, even though their increase in the loans is not as large as the housing loan, but non-performing loan increased substantially. So my main question is that we should treat the housing loan and corporate debt, household debt and corporate debt in a similarly. Corporate debt and household debt might be different. So when we think about macro-prudential policy, how we should distinguish the role of consumer loan and loans to the corporate. And in Japanese experience, housing loans is much more covered by the collaterals, and in some cases covered by the guaranteed by the others, and that more happen. And on the other hand, in case of corporate loan, limited liability is more strict, and so the situation is different in the Japanese standard. And I'd like to know the situation in Thailand, and what the difference between the corporate loan and consumer loan in think about macro-prudential issues. That's my questions in the Thai paper. Thank you very much.